What's up, guys? Welcome back to another video. Thanks for tuning into Stock Essentials. My name is Alex, and today we're going to be going over Wish stock context logic. So this is one of the most hyped up stocks in the market right now, alongside AMC. So Wish has a lot of momentum going for it. As we can see, Wish is up 5.73% today, and after hours it's up a little bit. But Wish had a pretty down day today, so if you got in on this dip, you are sitting pretty, because it was down maybe 96 or 7% at its low, and then it eventually recovered, and we're seeing a really good run up for Wish from after hours as well as during the last few minutes of trading. So I'm sitting on 200 shares of Wish, up 32%. So we're sitting pretty good, still holding, and I think there's a lot more room for growth for the stock. As we can see from the chart, IPO'd around $24, hit highs of around $32, almost $32, and it's still down a lot from its all-time highs and as well as from its IPO price. So there's a lot of rebound potential with the stock, as well as a lot of growth potential as well. So Wish is definitely a stock you want to keep your eyes out for. If we take a look at the short interest here, we can see the short interest for Wish is going to sky high levels. A lot of people think that this stock is overvalued, so they're shorting it and they're doubling down. So we're seeing a huge spike in short interest. Now, if this stock gets picked up by Wall Street Bets, which it has, in our last video, someone put in $4.6 million into Wish stock. So a lot of people are pouring money into the stock because of the high short squeeze that we can see right here. So if we can continue to see this bullish momentum on Wish, we could definitely see a short squeeze with this stock, and it could go to pretty high levels. So keep your eyes out on Wish. On the option summary for Wish, the call to put ratio is pretty high, favorable for calls. So a lot of people are bullish. There's a lot of bullish momentum, and Wish is one of the most talked about stocks in the market right now. So if we take a look at the dominant strikes and expirations, a lot of people are buying calls for the August 20th expiration date, which is very interesting because most people tend to buy short-term expirations. So by seeing that people are buying call options that are 2 months out, we know that they're pretty smart with it because they're giving themselves a lot of time for the call options to play out. And I definitely agree with it. If you want to play options, call options on Wish, you want to do it a few weeks to a few months out, because you don't know when the stock is going to squeeze, and it gives you a lot of time for the options to play out. Now, as far as the strikes, what strikes do you want to look at? A lot of people are playing the $20 strikes and the $15 strikes. So that is what you want to watch out for. If you want to be a little bit safer, you want to do a $15 strike. If you want to be a bit risky and go for some higher gains, you want to do a $20 strike. But the more out of the money you go, the less chance it is you're going to make money. But if Wish goes to the moon, you're going to be making more profit on those out of the money calls. Because if out of the money calls go into the money, you're going to be making a lot of profit from that. The bigger the jump is, the more profit you're going to make. So a lot of people are buying these August 20th call options, the $15 strike as well as the $20 strike. And if you want to, I would highly recommend the $15 strike. You don't want to put too much risk on the table, and 15 is pretty close to the money right now. Wish sitting at $14.42. So a $15 strike is pretty much at the money, and it's a strike that I would highly recommend if you want to play Wish options, especially for the August 20th date. The options is only going to cost you just under $400, so it's not really that expensive. Remember, don't put your entire portfolio into call options. They're very risky, and you don't want to blow up your account. Don't follow the people on Wall Street Bets going all in. That's just really risky, and it's one way to blow up your entire account. So always put in a small portion of your portfolio into these plays. just to be a little bit safe and take risk off the table. But that's my take on it. So yeah, I would do the $15 strike call for August 20th. Gives you a lot of time. It's 2 months out, and you just basically have to buy it and hold it and then wait until the stock squeezes, because the short interest is really high. So I do think we may see a short squeeze with Wish stock pretty soon. Now, if you want to do shares, I would highly recommend shares as well. You're not really going to get hit with the theta decay. So shares is a great buy and hold option alternative to buying these long-term 2 month out calls. So, and sitting at $14.42, it's pretty cheap right now. So you definitely can pick up some shares if you want to enter in Wish. But of course, don't put your entire portfolio into the stock. That's just one way to blow up your account if it goes against you. Another option would be to sell cash secured puts, preferably 1 to 2 weeks out. So we could do something like a July 2nd expiration date, selling a put. We could do, if you're bullish on it, you could do at the money, slightly below the money. You could do something like a 13.5 strike put expiring next week, July 2nd, and you will collect $108 of premium for doing so. Remember, you're going to need to put down collateral equal to the strike price times 100, because each contract holds 100 shares. So you're going to have to put down $1,350 of collateral. So that's not that much. It's only $1,000 or so to put down as collateral, but you do collect $108 of premium if Wish stays above $13.50 by next week. If Wish goes below $13.50, you're going to have to buy 100 shares at $13.50 each. And our break even is going to be $12.42 because we're receiving $108 of premium right here. So our cost basis for, if you do get assigned, it's going to be $12.42 per share, which is pretty good. You're pretty much buying the dip on Wish when it's sitting at $14.42 currently. So that's a strategy I would probably do. I'm probably going to be eyeballing this $13.50 cash secured put. I may sell it tomorrow, but it looks pretty good to me, and it capitalizes on the high premiums for these high volatility stocks, as well as if the stock decides to dip, you will be able to buy shares at a cheaper price. And selling puts is a lot safer than outright buying 100 shares because we're lowering our cost basis. But the downside is if Wish decides to go to, say, $100, you're going to be missing out on a ton of profit because our max profit is going to be our premium that we collected because we're not a shareholder yet. So if you want to buy shares, if you think it's going to skyrocket pretty soon, you could go ahead and outright buy your shares. But I like to play, I have a larger account, so I like to play a little bit safer and do a mixture of both shares and selling cash secured puts in order to reduce my risk. But that's about it for this video. That's my take on Wish. What are you guys' thoughts? Leave a comment down below. And of course, subscribe if you're new to the channel. It helps out a lot. Thanks for watching.